Merchant power demand and tariffs have fallen in the couple of months, led by lower demand due to the lockdown. And JSW Energy, which is one of the larger players in this market, has definitely seen the impact of this in its Q1 earnings, and thus the revenues and earnings have also fallen. In our ideas for profit today, I'll discuss the key earnings fine print of this company to really find out if investors should keep an eye on this one going forward. Well, the company has reported a 25% year-on-year drop in the revenue in Q1, and that was due to the lower demand, and also volumes got impacted. Now, its key plants, Ratnagiri and Vijayanagar, saw volumes dropping by 39% and 29% respectively, and that's on a year-on-year basis. Now, the plant load factor or PLF at Vijayanagar came in at 24% and 58% in the case of Ratnagiri. However, the company was really able to control its profitability in the Q1 quarter. Now, EBITDA fell by 8% on a year-on-year basis. The company was also able to control the cost related to say fuel as a result of the lower international coal prices as well. Now, the company also retired part of its debt using the surplus cash, and that further really helped the lowering of interest cost. Interest cost during the quarter fell by 11% on a year-on-year basis. Now, on a net basis, debt was down by 450 crore rupees, and this helped in net profits growing marginally on a year-on-year basis. Now, in terms of the impact of COVID-19, it would still take some time, probably say 1 or 2 more quarters, to stabilize the business, considering the current low demand and also the unfavorable pricing environment right now. Now, in the current fiscal year, Street is building a drop in the earnings to the tune of about say 30 to 40%, but they expect it to normalize it by the next fiscal. Now, thankfully, the revenue mix is good. Currently, about 80% of its over 4,000 megawatts of operational capacity is tied through the long-term purchase power agreements, which is a good source of even free cash. Now, the company is sitting on a good cash and cash equivalent of say around 1,500 crore rupees, which is close to 20% of its current market capitalization. Now, after factoring in the cash in the books, its net debt to equity stands at about 0.8 times, which is one of the lowest in the industry and is manageable for now. Now, it is looking for investment in the lucrative power assets and the renewable energy space, which is offering a good pay percent from the levels seen by the end of March. Now, the company has a market cap of say 7,491 crore rupees, and after adding the net debt, the company is valued at 17,200 crore rupees on an enterprise value basis. Now, this value of the company at 3.8 crore rupees per megawatt of the operational capacity of 4,400 megawatts, this is much lower than the market value of about 6 to 7 crore rupees per megawatt for the Greenfield project. Now, JSW Energy recently also cancelled large deal to acquire one of GMR's power plant in the light of COVID-19. The focus on improving operating efficiencies, revenue mix, and conserving cash in a bid to manage the crisis is definitely yielding good results for the company. On the valuation factor matrix such as price to earnings ratio, the stock is trading at 8 times the FY22 estimated earnings and offers a good dividend yield of over 4%, which is really good. Now, looking at the strong balance sheet supported by the cash in the books, also valuation which is attractive right now and offering good dividend yield as well, the stock can be a long-term bet.